morning and welcome to Business Buzz. Coming up, the Dangote refinery secures a $1 billion backing for what could become Africa's largest ever share sale. The Nigerian exchange extends its losing run as investors shed another 544 billion naira. Nigeria loses its crown as the world's best performing stock market, overtaken by a surging South Korea. And a global bond sell-off drives American borrowing costs to a 20-year high with consequences that reach all the way to the naira. Thank you for joining us. I am Louisa Asidi. Welcome. We begin this morning with the energy sector and a major milestone in Nigeria's economy. For 3 months in a row, Nigeria has done something the country has struggled to do for years, met and even beaten its production targets set by the Organization of the Petroleum Exporting Countries. In the month of July, Nigeria pumped an average of 1.505 million barrels of crude oil a day. Add in condensates and the combined figure climbs to 1.67 million barrels a day, comfortably above the OPEC ceiling of 1.5 million. But here's where it gets interesting. Even with clearing the target, total output actually slipped by about 4% compared to June, when the country produced 1.735 million barrels a day. Regulators point to operational troubles at the area and aqua feeds as the main drag. However, there is a deeper question underneath the headline. Some analysts note that July's success leaned heavily on just a handful of strong terminals, rather than the whole sector firing on all cylinders. So what does this all mean for government revenue, for the naira, and for the ordinary Nigerian? Is this a genuine recovery in our oil fortunes or a fragile wind that could reverse the moment another field goes offline? To help us make sense of it, we're joined this morning by David Akanwo, a financial analyst and a lecturer who watches these numbers closely. So you're welcome to the show.
Thank you very much.
It's so lovely to have you once again with us.
It's my pleasure.
Yes, you always bring light to the program and we're entirely grateful for that.
Thank you.
Okay, so first of all, let's start with this question. Now, when we hear that Nigeria has met its OPEC quota for 3 months in a row, should the average Nigeria see this as good news, or is it more of a technical win that may not change daily life?
It is good news.
Okay.
It shows capacity. It shows that Nigeria is gradually building capacity, although it simply also means that we need sustainability. So our effort now should not be, oh, we have won. How can we sustain this level? So it's a win for us.
Oh, that's very lovely. That means we'd soon start seeing changes in our daily life, right?
Definitely.
Okay. So production went up enough to meet the quota, and but the total output is still fell by about 4% from June. Now, how can both be true at the same time? When the numbers, which of the numbers rather matter more to people, to ordinary Nigerians?
All right. The OPEC quota is 1.5 ppb. That's per day.
Yes.
And even when it fell from June to July, but it's still above by 5 million that threshold. So we are still there. That doesn't mean that we have fallen, but what it simply means is that some itches might have happened, and everybody knows that technical issues come up once or twice. And what is important is by this month end, by the time we look at the figures again, we should be able to have something higher than July. Life is sometimes could be up and down. It doesn't matter, but at least we are sustaining that, maintaining that quota, and we've exceeded it. That's what matters.
Yes, Nigeria has exceeded the quota, which is the first time, actually.
Yes.
That's a plus for Nigeria.
A big plus.
Yes. So reports say that July's results relied heavily on just few strong oil terminals. Now, if a problem hits one of those terminals, how quickly could the whole picture change?
Yes, because that's a breakdown. when you have a whole body working and suddenly the right arm is off, it will affect the whole system. So it's possible to drag us back to status quo if we are not careful. But that is why we need sustainability. Sustainability is the key word.
So we need to be sustainable in our production rate so that we don't fall back to what we were before.
Yes.
Okay, for many Nigerians, the big question is, when oil production improves, when do we start to feel it in our pockets? Now, what has to happen between more barrels pumped and more money in government accounts?
When there is more production, more sales, more revenue, that is when the government starts feeling it, not us as individuals, because it's only when you bring this and convert it into locally produced, petrol, kerosene, and all that the people will now start enjoying, lower cost of all these productions. So we will only enjoy it when we start producing it in Nigeria. That is, you have the crude oil that you can now be able to produce it into some other part of, what they do, distillation, distill it into fuel, distill it into kerosene, into diesel. Then we have a lot in Nigeria to go round. That means that the force of demand and supply will now start playing, and the crude oil, the petroleum products will reduce. The cost of petroleum products will reduce. So, that's when it will affect us as individuals.
Okay, so when the cost of petroleum production reduces, it will start affecting us.
Yes.
And then we start seeing an easier life.
Definitely.
Okay, now some people expect higher oil output to strengthen the Naira. Now, based on what we are seeing now, is that expectation realistic in the short term? Or do you think it's too early to say so?
It's too early to say so because of the keyword sustainability.
Okay.
You see, Naira didn't just get to this level. It took time. So for it to reverse, it will also take some level of period. However, if we can sustain this tempo, definitely before we know it, our foreign reserve will be better off and Naira to the dollar will improve. And that is when we start enjoying the dividend of this whole thing. So it's sustainability. If we go back to status quo, we won't enjoy it. We won't even feel it. Yes.
So the key word, like you said, is sustainability.
It's sustainability.
We need to be sustainable in this production rate that we are right now.
True.
Okay. Now, if oil revenue increases because of this performance, which part of the economy, the entire Nigerian economy, do you think would benefit well, or rather first, in a way that ordinary Nigerians would notice?
That depends on government policy. You don't tell government how to, share this fund, how to distribute this fund. But I know that at that time, government will have revenue to plan with, and they can now look at the key areas in the economy to ensure that those places, those areas improve, such as security, because in fact, if insecurity hits the oil sector, we'll go back to that status quo. That problem will still come up. So government will begin to look into those areas, infrastructures that will create enabling environment for investors to come in. And these are the areas they begin to look at. But as long as the fund is available, not just the sky, heaven is our limit.
So Nigeria, first of all, has to solve her problems.
Yes.
Insecurity, infrastructure issues.
Yes.
So that production levels keep on rising in the way that investors can come to Nigeria and invest, which it will in turn improve the economy of Nigeria.
Yes, and we start looking at diversification of investments. You don't just, look at, it's been long, and we've been saying this, that you don't just depend on oil alone. Oil is the buffer. Then you start laying other foundations that will help us to, if there's any issue that arises from oil, let's not forget that technology is improving. And gradually, electricity cars are coming in. People are now beginning to look away from, the oil sector. So if we are not careful too, we'll be behind. So we need to also diversify. And that's what we should begin to look at. How do we diversify? So we can use this oil, this trend now to help ourselves to, bring in investors, diversify, and let's see how this works for us.
Okay. Now, there have been years when Nigeria struggled to meet its OPEC quota.
Yeah.
Unlike now that Nigeria has gone over
Yeah.
the quota. Now, what has changed recently that helps the country to hit this quota for 3 months in a row?
You see, I think the government now began to look at the technical areas in the production and ensure that the equipment and both human and capital resources were working well, and that's one of the advantages that brought about what we are seeing now. And they went beyond that to ensuring security slightly, improved, in that area. So when people have the opportunity to work, they put in their best, and the output becomes the benefit that everybody sees.
Okay. Now, operational problems at the Eha and Akpo fields were mentioned as a reason the output fell in July.
Thank you, yes.
So now, for a non-expert, what does operational problems usually mean in simple terms?
That's what I just mentioned, the technical aspect and the human aspect. For me, we have experts on the ground. So when somebody tells me it's technical, I don't doubt, because I'm not a professional in that area. But the issue is that we have experts. So if there is an issue with their operation, that means that there is human interference somehow, whether intentional or unintentional. And so, yes, technicality, but it is human that determines the technical operations of the organization. So if you ask me, I would say it's more of human than technical breakdown.
Okay, so it's more of human than technical breakdown when you're talking about the operational terms. Yeah. Okay, now if Nigeria continues to meet its OPEC quota for the rest of the year, what would that mean for the country's budget and for projects that depend on oil, money, roads, schools, or hospitals?
Yes. Then we'll begin to look at surplus in our budget.
Okay.
So we won't need to go and borrow money again to be able to fund the budget. So we have the money available, and that's a plus for us, because the more we borrow, the more the value of our naira depletes. So now that we are seeing a positive light towards that end, it will help the budget. And if the money is available, more investment into infrastructures, basic infrastructures, power, making the environment suitable for investment. And when the environment is suitable for investment, investors will come. People are looking to multiply their funds. And the only way they can do that well is if they have a favorable environment.
Okay, so if Nigeria continues to meet its OPEC quota throughout the year, infrastructure, there will be improvements,
massive
hospitals,
changes.
Schools, you go to some government hospitals and you see that something is wrong somewhere. But with the continual progress of the OPEC quota throughout the year, we would see a little change there.
We are supposed to see that. I also said that depends also on the government, the policy of the government. What is their own area of emphasis now? What areas do they want to really invest this money into? If infrastructure, road, hospital, basic infrastructures are what they are looking at, fine, you will see it there. They should also look at human capital too, because a lot of people are running out of the country, and these are the qualitative people that have what it takes, because they won't allow you come over there when you don't have anything to offer. So they take our best hands, and we are left with blessed people.
Okay, that's wonderful. Now, on the other hand, if production drops again next month because of another field issue, how serious would the impact be on government revenue and on the exchange rates?
Yes, the revenue will drop. And again, we go back to status quo, as I said. The value of naira will either remain or further drop. And that's not what we want. And you see, I will give you an adage. If for those that want to lose weight, they go into the field and they start exercising. And after like 2-3 weeks, they get tired. Now, they lose 1 kg or 2 kg. By the time they stop, they gain about 20. So if now that we are trying to sustain this tempo, if we go down, the impact will be more than where we are coming from.
Okay, so we shouldn't at any point go down. We have to continue.
Yes, sustain this thing. And we have the wherewithal to do so.
Okay. Now, many young Nigerians hear about oil quotas and production targets, but they don't see how it connects to jobs. How can consistent oil performance actually lead to more jobs, and in which sectors?
Yes, more money, more job. In the oil sector to start with. Okay. By the time you have more money, you need more hands to further increase production. And so you employ people. And it's going to be almost in every sector. Okay, let's see the financial sector, for example. When they are doing well there, it will spread to needing more funds. So the financial sector will come to have a role to play. And as they are playing that role, they also need more hands. So employment will come. Will it not fall into spread to the agricultural sector? Yes, it will. Because when it gets to the agricultural, people need more money. They have more money. They buy more food. They want to eat healthier, and so the people begin to produce more food, employment is gained, so it goes into all sectors. They need to move. Mobility is very important because you need to move your product from one point to another, so it goes into the transportation sector, so it's going to spread across all sectors.
So basically, from what you were saying, if oil production keeps on going further, every sector
will benefit.
Every sector will have a hand of that money that comes into the oil sector.
Definitely.
Okay. Now, some analysts argue that Nigeria should not only focus on meeting OPEC targets, but also on fixing long-term problems like theft, pipeline vandalism, and aging infrastructure. Now, you did say something about that, but where should the priority be right now?
The priority is whatever it will take to sustain this tempo.
Okay.
We know that, for example, Nigeria became part of OPEC since 1971. And some of these infrastructures has been there. So we don't know what exactly goes on in the system, but I know for them to say we have operational breakdown, it simply means that they are mostly saying technically there's operational breakdown. So it could be because of aging equipment. So what stops us from getting new ones? What stops us from, so that before it breaks down, we already have new ones waiting. So nothing stops us from achieving that. Don't let us wait until the issues are coming up. There's a breakdown, shortage and all that, losses here and there. No, let's get these things ready. Material should be available when it should be available. The people on ground, they should be time to time monitoring of the way the system is working, reporting on it every day, so that decisions are taken and we won't have any downtime.
Okay.
Yeah.
So we shouldn't wait until the problems become so big. We should start by fixing them one after the other.
Definitely.
To make sure that we won't have an issue meeting our OPEC quota and oil production runs smoothly.
Yes.
Okay. Now, looking ahead, what are 2 or 3 things an ordinary Nigerian should watch in the news to know whether this oil recovery is real and lasting, or is it just a temporary improvement? Okay,
first of all, they should just check. Let's check our production. It shouldn't go below 1.5 million barrel per day.
Okay.
Which is the OPEC quota. And they should also check what is the effect of this now. Our people bringing this revenue and diverting it into some other areas. I wouldn't want to go too deep, but you see, when you politicize the system so much, the funds will go into areas it's not supposed to go into. And no matter what we sell, we will not see the benefits in that same capacity. So the people should now be looking at, okay, our roads getting better. Do we now have hospitals? Not just only having the hospitals, do we have doctors to treat people in those
Functioning
hospitals?
hospitals,
Yes, functioning hospitals. Yes, if you don't have the doctors there, that is human capital is low. You understand? We should be looking at the road. We should be looking at investors. Are people coming in and investing into, so many sectors that is yielding, increasing employment? That's the basic thing. Because the truth of the matter is that if people are redundant, criminality will increase. So these are the areas they should be looking at. Employment level, look at the road infrastructures, health infrastructure. People should have sicknesses that is curable in Nigeria. Not when you have a particular ailment, it's a death sentence. These are the areas that will show that something is happening.
Something is happening.
Yeah.
So I think, first of all, I would say that's a wonderful milestone that Nigeria has achieved, having
Definitely.
the OPEC quota going up more than it's actually
Yeah.
intended to go to.
Definitely.
So that's very, very wonderful. So thank you, sir, for your input today.
Thank you very
As
much.
always, you have been wonderful, bringing light to our business buzz. So thank you so much.
Thank you.
So we'll go on a short break. When we return, more business buzz. Now to the markets where the Nigerian exchange closed lower again on Tuesday. The all-share index shed 843 points, 0.35% to close at 241,611 points. Market capitalization fell by 544 billion naira to 155.97 trillion naira. Market breadth was negative, 23 stocks advanced, 41 declined, and 83 closed unchanged. Head down, Mikol led the gainers up 9.97% to 3 naira 20 kobo, followed by Veritas Capital and Tanzaliza. Red Star Express pays the losers down 10% to 16 naira 20 kobo. In all, some 418 million shares were traded, worth about 19.5 billion naira, across 35,625 deals. Now for the wider world, where global shares fell across the board in the latest season, dragged lower by a sell-off in government bonds and by another slide in technology stocks. Let's start in Europe, where the session was mixed to lower. Germany's DAX fell about 0.5% to 26,217 points. The CAC 40 in Paris was down by the same margin at 8,540 points. London stood apart. The FTSE 100 edged up 0.2% to 10,737 points, lifted by its energy and defense names. Over in Asia, technology led the decline. Japan's Nikkei 225 was the weakest of the major markets, down 2.5% to 67,460 points. On heavy selling in cheap stocks, memory maker Corsair fell more than 7% and Samsung Electronics lost about 2%, though its rival SK Hynix bucked the trend, up around 1%. South Korea's Kospi fell 1.6% to 6,870 points. Hong Kong's Hang Seng was a rare gainer, marginally higher at 25,471 points, while the Shanghai Composite added 0.2% to 3,990 points. Now turning to Africa, it was a mixed session across the continent's major exchanges. In South Africa, the largest market, the Johannesburg All Share fell about 1% to 111,275 points. Egypt's main index in Cairo, the EGX30 eased 0.3% to around 75,200 points. Morocco's Marsi index in Casablanca was little changed at around 18,800 points. There were gains elsewhere. In Ghana, now one of the world's standout performers this year, the composite index slipped 0.7% to 15,203 points. Kenya's Nairobi All Share added 0.3% to 242 points. And in Zimbabwe, the All Share index was the day's standout, up nearly 2% to 485 points. Now to energy and commodities, where oil is trading near multi-week highs. Prices have firmed as tensions between the United States and Iran deepen. President Trump has threatened further economic pressure on Tehran and warned Oman over control of the Strait of Hormuz, with Iran vowing a more offensive stance. Against that backdrop, Brent crude, the international standard, was little changed at about $90.90 a barrel. United States benchmark crude rose about 0.4% to around $84.80. Natural gas held broadly steady at around $3.90 per million British thermal units. Gold fell 0.8% to roughly $4,380 an ounce, as higher energy prices and rising bond yields weighed on it. Back on Wall Street, stocks closed lower, weighing down by rising borrowing costs and a rot in chipmakers. The S&P 500 fell about 0.6% to around 7,700 points. The Dow Jones Industrial Average was down about 70 points, or 0.1%, while the Nasdaq Composite fell 1.3%. The damage was concentrated in the chipmakers. A closely watched index of semiconductor stocks fell more than 5%. Nvidia lost 2.2%, Western Digital dropped 7%, and Sandisk fell about 9%. Behind the move, the yield on the 30-year United States Treasury bond touched its highest level in nearly 20 years. One bright spot, Home Depot, rose about 1% after beating earnings expectations. And finally, on the currency markets. The dollar firmed against the yen, buying around 159.7 Japanese yen. The euro was little changed against the dollar at about 1.157. Let's take a quick break. When we return, the Dangote refinery's billion-dollar step towards Africa's biggest share sale. Welcome back. We begin the sector round with the day's biggest corporate story in the energy sector, where the Dangote refinery has taken a major step towards going public. The plant has completed a $1 billion underwriting program ahead of a planned share sale that could become the largest ever on the continent. The program has two parts: a $600 million private placement, which is already funded, and a further $400 million commitment in support of the public offering. It was structured by two advisory firms, Marub Strategies and Lithium Capital, with the funding channeled through a special purpose vehicle. The refinery is the largest in Africa. It has applied to Nigeria's Securities and Exchange Commission for a listing, with reports putting the potential size of as high as $5 billion and a possible debut as soon as October. The company frames the deal as a test of whether African institutions can mobilize long-term capital for strategic industry and a step towards deeper, more integrated markets across the continent. Staying in the energy sector, but with a very different story, the fallout from Nigeria's first major corporate bond default in 7 years is widening. The ratings agency Agosto & Company has withdrawn its rating on Geregu Power and its 40 billion naira bond. Geregu defaulted this month, missing both a coupon payment and a scheduled repayment of principal. Crucially, Agosto did not simply downgrade the company, it withdrew its opinion altogether, saying it no longer has sufficient reliable information to rate it. This is because Goregu's management has told the agency that its past financial statements are now under independent verification. On the exchange, the shares are languishing at a 52-week low. The company has since named an acting chief executive and says it is in talks with advisors and stakeholders. For corporate bond market that pension funds, banks and insurance have been buying into, the episode is a test of confidence. Now to the banks and a policy shift that could reshape where Nigerians put their money. The central bank has reopened its open market operations, which is its short-term securities, to individuals and companies for the first time in 7 years. Until now, only banks could take part. The timing matters, as these instruments are currently yielding around 20%. At a recent auction, investors bid nearly 5 trillion naira for only a fraction of that on offer. The concern is what that pool could do to the stock market with near risk-free returns close to 20%. Some money that would have gone into shares may now flow into these bills instead. But analysts are cautious about overstating it. One, Isaac Osaru of First Securities Brokers notes that a fixed return of 17 to 18% does not necessarily beat a share that can return 30 to 50% over a year. In his view, this becomes another option for savers rather than a wholesale exit from equities. Stay with the banks and one investor's steady march towards control of a major lender. Femi Otedola, the chairman of First Holding Company, has bought a further 147 million shares worth about 20.7 billion naira. That lifts his disclosed purchases this year to more than 400 billion naira and his stake to around 26.5%. He has been clear about his intention to build a controlling position of more than half the company. The buying has tracked a remarkable run in the shares, up more than 190% this year, though notably First Holding Company was among Tuesday's biggest fallers. And staying with finance, where Africa's biggest bank is eyeing a piece of one of Nigeria's best-known fintechs. Standard Bank of South Africa is in talks to buy a stake in Opay, the mobile money operator, ahead of a planned listing in the United States. Opay, backed by SoftBank and Sequoia Capital, is targeting a valuation of around $4 billion and is working with Citigroup, Deutsche Bank, and JP Morgan on the float. The size of the stake Standard Bank is seeking has not been disclosed. It follows the South African Group's pledge in June to deploy more than $15 billion across Nigeria and other African markets. For Opay, built since 2018 into one of Nigeria's largest digital platforms, it would be a notable vote of confidence. Though a United States listing carries currency risk, with Naira earnings worth less in dollars after years of devaluation. One more from the financial sector and a reckoning for parts of the insurance industry. The regulator, NACOM, has closed its recapitalization exercise and 6 firms have been left outside the approved list. They are Universal Insurance, Starco, Nigeria Reinsurance, Nikon, Royal Exchange, Prudential Life, and GoldLink. Under the 2025 reform law, insurance had to raise their capital sharply, life firms to 10 billion naira, general insurance to 15 billion, and reinsurance to 35 billion. 48 insurance and 2 reinsurance made the grade. For the 6 that did not, the options now are stuck: mergers, liquidation, or another resolution set by the regulator. The wider goal is a smaller, stronger industry, in a country where insurance still reaches barely 0.5% of the economy. It's time now for another break. When we return, the number behind every Nigerian shopping basket. Welcome back. Turning to the economy and the cost of living, where the headline number and the number Nigerians actually feel are moving in opposite directions. Nigeria's headline inflation eased for a second straight month in July to 15.43%, down from just under 16% in June. A year ago, it was running at almost 25%. On the face of it, that is a real progress. However, beneath the headline, food prices went the other way. Food inflation climbed to just over 20%, a sixth straight monthly rise. Month on month, food prices jumped more than 5%, the sharpest kind of increase for a household budget. However, the pressure is uneven. In Adamawa State, food inflation is running above 50%. The items driving it are the everyday basket: rice, yam, plantain, tomatoes, pepper, onions, beef, eggs. Analysts point to the structural causes: insecurity on farms, the high cost of transport and energy, expensive fertilizer, and the naira's earlier weakness feeding into imported goods. As the economist Muda Yusuf puts it, food, transport, housing, and energy account for the bulk of the pressure. And in his words, monetary policy alone cannot solve it. So, the disinflation is genuine. But for a family whose income goes mostly on food, the relief is still for now a statistics rather than a saving. Now to manufacturing, and a question many Nigerians building a home have asked: why is cement so expensive here? The competition regulator, the FCCPC, says it has found possible price manipulation in the cement market and is deepening its investigation. Its cross-border study compared Nigeria with 7 other African markets, and the findings are striking. Nigeria has abundant milestone and installed capacity well above what it consumes. Yet, a 50-kilogram bag has risen to as much as 13,000 naira this year. In Kenya, a bag costs the equivalent of about 7,300 naira. In Tanzania, closer to 6,500. Even Togo, which has no limestone of its own, is cheaper than Nigeria. The regulator has summoned the major producers to hand over records on pricing and capacity. It stretches these are preliminary findings and that no company has been found liable. The stakes are everyday ones. The cost of cement feeds straight into the price of housing and into every road and bridge the country builds. Turning to aviation and another cost that falls hard on the traveler. Nigeria carries some of the highest aviation taxes and charges on the continent, as much as $180 on an international ticket against an African average naira 70. Industry figures count more than 50 separate taxes, fees, and charges built into a fare spread across 4 government agencies. Only a handful are visible to the passenger. The result is a striking one. A short flight between 2 African cities can cost more than a long-haul trip to Europe, and it is reshaping behavior. Many Nigerians now fly first to Accra, then onward, because the same journey begun in Ghana is cheaper. The Travel Agents Association says it is a loss to Nigeria of both the passengers and the taxes they would have paid at home. And to close our Nigerian coverage, a change at the very top of the global league table. For about 5 weeks, Nigeria held the title of the world's best performing stock market in dollar terms. That reign has now ended. A sharp rebound in South Korea has pushed its market back to the top, and Ghana has moved into second, leaving Nigeria third of the 92 markets that Bloomberg tracks. South Korea's Kospi is up more than 68% for the year, Ghana just under 67, Nigeria just over 65. However, regulators here draw a distinction. Korea's surge rode almost entirely on one theme, artificial intelligence, and fell hard when that theme wobbled. Nigeria's rally, they argue, rests on something broader: banking reform, a steadier naira, and the overhaul of the foreign exchange market. As the head of the Securities and Exchange Commission puts it, a market standing on one leg falls when that leg breaks. We'll have one more break. Still ahead, the continent's markets from a perjured round to a gold boom in Mali. Welcome back. Now to the continent, where we begin in South Africa, where the rand is under quiet pressure. The currency held broadly flat at around 16 rand and 20 cents to the dollar. It is being squeezed on two fronts: the tension in the Middle East and a lower gold price, gold being one of South Africa's biggest exports. Investors are now waiting on the country's inflation figures, which is due today. Economists expect the annual rate to have eased to 4.5% from 5% in June. On the Johannesburg Exchange, the blue chip top 40 index closed down 0.8%, part of the same global caution we saw across markets. Staying with commodities and to Mali, where gold is booming again. Industrial gold output jumped about 30% in the first half of the year, well ahead of the government's own forecast. Production reached 23.5 tons, a clear rebound from a difficult 2025 when a standoff between the state and mining companies dragged output down. The country's biggest mines, operated by B2Gold and Barrick, led the recovery, and the government has just approved a permit for a new mine. For a state that has tightened its grip on the sector to capture more revenue, the numbers suggest the strategy. For now, it's paying off. Elsewhere in Africa and to Libya, which is seeking tens of billions of dollars to rebuild its oil industry. The head of Libya's national oil company says the country needs between $30 and $40 billion of investment to restore itself as a major crude producer. Libya holds Africa's largest proven oil reserves. However, years of division and a shortage of capital have held it back. It is targeting 2 million barrels a day by 2030, up from about 1.4 million now, with more than 20 discovered fields still undeveloped. The challenge is trust. The company is weighing a return to concession-style deals in which investors carry more of the cost and is bringing in external auditors to reassure them. However, most of Libya's oil lies in territory controlled by rival factions, and smuggling, its chief says, is damaging the economy badly. And one more from the continent's energy map and to Mozambique. ExxonMobil has revived plans to build a major oil gas in the country's north, the Rovuma project, expected to cost around $30 billion. The developers have awarded about $1.1 billion in early contracts. The clearest sign yet that the long-delayed project will go ahead. Work had been on hold since a deadly militant assault in 2021, and security in the region remains fragile. What has changed is the wider market. With war in the Middle East disrupting gas from the Gulf, buyers are looking for supply elsewhere, and Africa is back in the frame. Now to international business and the story driving markets elsewhere this week: a sell-off in government bonds. Borrowing costs for major governments have climbed to their highest in decades. In the United States, the yield on the 30-year Treasury reached its highest in nearly 20 years. Germany's touched levels last seen in 2011, France since 2008. Investors point to a mix of forces: heavy government borrowing, stubborn inflation, and a wave of debt from technology companies funding their spending on artificial intelligence. Higher borrowing costs hit fast-growing companies hardest, and it was the chipmaker that led Wall Street lower, a closely watched index of semiconductor stocks falling more than 5%. When the price of money rises for the world's largest economies, it tends to ripple outwards. And as we would hear, emerging markets like Nigeria are not spared. And a striking counterpoint in Asia, in China. While borrowing costs are rising almost everywhere else, China's is falling. The yield on its 10-year government bond has dropped to its lowest in more than a year, as weak growth pushes investors into the safety of government debt. Fresh figures showed factory output and consumer spending both slowed last month, and new bank lending fell. The problem, strategists say, is not a lack of demand for credit. Companies are not borrowing to invest or hire, and households are wary of spending. It leaves the world's second largest economy pulling in the opposite direction to almost everyone else, a sign analysts say that its troubles are now largely homegrown. That is all we have for you today on Business Buzz. I am Louisa Asidi. Thank you for watching.